Today's video is going to be on Cornerstone, how it reinvented me after Corona, and why it's skyrocketing now in my opinion. I'll share with you a little backstory about me on who my mentor was and mastering passive income on margin, which gave me the ability to ultimately find the C's or Cornerstone. If you need help living the FIRE lifestyle and getting both days gains and dividend ability like me to earn over 100K per year in dividends at this channel, email me for my e-guides at akintodd48@gmail.com. If you stick around until the end of the video, I'll break down why everyone is wrong about the C's on Seeking Alpha and how one negative author in particular forced me to reinvent myself after nearly losing it all after the Corona crash. Some people say I only post videos when my portfolio is up. No, I like to post when it's down too because I like transparency to be accountable to myself while still showing the relative outperformance to the indexes. See my past videos if you don't believe that. Also, maybe, just maybe, the sharp movement off the lows recently should give you a subtle clue to buy as well, even though I never recommend outright buys or sells to people. So yes, we earn over 100,000 per year in dividends at this channel. Okay. And that number has stayed the same after the minor dividend cut and Cornerstone. I'll share with you briefly how I did that while managing to keep my margin debt the same, and I even grew my available for withdrawal in the process. We're also outperforming the market, okay, as you can see here, on a 3-year basis, okay, proving that dividends on margin, okay, work during bear markets like in 2022, or even the recent spill the market took in October when all funds got hit, not just Cornerstone. Simply put, I swapped UPRO for more D's, Defiance funds, and a bit more C's, Cornerstone funds, at the open yesterday before the huge run-up. UPRO doesn't have a dividend, and the C's can actually outperform on market rallies like yesterday, so the decision was easy. The key was the maintenance swap, okay, and I'll show you that right now. So if we go into the portfolios, I'll show you the maintenance, okay? See, my available for withdrawal stayed high. We're at 194,000, and yet my debt stayed roughly the same too, as I show you here below. I'm in France, so the internet is slow here. Bear with me. So as you can see here, my margin debt, okay, let's load this up, is 170. I added to it yesterday, by the way, because we added to IWMY and FEPI. So that's why my margin debt actually went from 160 to 170. But my dividends of 160,000 per year approximately will pay back this debt in about 1 year. Okay, so again, the key was the maintenance swap yesterday. UPRO doesn't pay a dividend again, and so look if you go hit trade on Cornerstone, you'll see the maintenance here. Snapshot. Okay, view margin maintenance requirement 30%. So this is the key to living financially free out of my brokerage account. All right. If you need help understanding maintenance and how I use it to live the financially independent retire early lifestyle, or FIRE, that's in my volume 3 margin e-guide. Okay. Defiance funds are 50%. So you have to keep that in mind. All right. So I bought a little bit of Defiance yesterday after swapping out of UPRO, which UPRO is higher maintenance. UPRO is 75% to 100 maintenance. And so that takes up all my equity. If I have 10K in UPRO, then that takes up 10K for withdrawal. But swapping to the C's and D's lowered my available for withdrawal, kept my margin debt the same, and it kept my dividends high of around 160,000. Okay, so I also bought more Cornerstone. I told you, and I raised my position size in it further, as you can see here below, Cornerstone. But I'm comfortable with doing this due to my experience in the fund. Okay, I learned how to play Cornerstone properly from Clinton $20 bill on Seeking Alpha, who are not the mentors I was mentioning in the intro. I have a much better story on that. If you need help playing Cornerstone properly, email me for my volume 4 e-guide there. You can also try to learn yourself by sifting through the comments on Seeking Alpha, but there's a quagmire of negativity to throw you off, and it's quite expensive as well. Discord is much cheaper, which has some of the best minds recruited from Seeking Alpha. Plus, no one on Seeking Alpha was pushing the constructiveness and offensive ability like the over 500 members and I were doing on our Discord chat room during the darkness of October. We were figuring out who was betting against us, exactly how many shares they were dumping and still owned. We were shorting as well, covering at the lows, thanks to our chartists in the chat room and the experienced members who know the thresholds to buy at around the NAV and Cornerstone. Remember, when you buy my e-guides, you get free access to Discord for life, as well as my phone number to call me anytime at. This is a unique feature that no other YouTube channel offers, so keep this in mind. Okay, so first on why the C's are skyrocketing, okay, and then on to the background story on me and how I master dividends on margin. It's simple. There are three main reasons the C's are rallying hard, in my opinion. First of all, we fell too far too fast. Look at this steep drop on the chart. Okay, if you go into the chart of Cornerstone, you'll see that this is just a drop of a huge magnitude that you don't see often. It's kind of like a rights offering drop, but it wasn't a rights offering. Many closed-end funds got taken to the woodshed and had this same kind of drop. Even value plays and other kinds of high-quality indexes fell along with it. I mean, the S&P was down 10% too. All right, we fell too far too fast along with everything else CEF or value-related last month. We also essentially touched the NAV on Cornerstone, which is where you buy, not sell. Here, I show you the performance of Cornerstone. It's a 4-star fund, and it beats the indexes, as you can see here on Morningstar. But I also keep Cornerstone's NAV up here, and you can see that we are close to its NAV price recently. So that's when you buy, not sell Cornerstone. Okay, and thirdly, the dividend cut wasn't as bad as expected since the market rallied to end October, which pushed the NAV up for the C's, the net asset value. The 21% dividend in the C's is set as a function of the NAV every year around October. This October just happened to be a perfect storm as the market itself fell harder than expected. Okay, now we'll discuss why everyone is so wrong on the C's in seeking alpha, and this permeates to the rest of YouTube like a plague, so we have to break this down. The first negative theme you hear all the time at Seeking Alpha is the Ponzi scheme of the C's and the drip at NAV feature. Well, most CEFs and dividend funds have a drip, a dividend reinvestment feature, but this one in Cornerstone drips its dividend at the NAV. I used to show you all my drip shares where we're up 30% plus and around 30% in each of these Cornerstone funds. I used to open these up, show you my tax logs. The market price is $6.94, but the NAV price is down here lower, which you just saw on the website. And so it drips that 21% dividend down at that NAV every month for extra money, free thousands of dollars per month. Okay, so you get days gains potential in Cornerstone, which you made $25,000 yesterday approximately in Cornerstone. You get the 21% dividend tax-free because most of it's return of capital. And you get the special drip at NAV feature, which you can't find anywhere else. And actually, Cornerstone owns the S&P 500 for its true foundational value. So this is why it's 4-star, in my opinion, on Morningstar. Please find me a better fund than this. Also, it keeps its dividends steady each year because it sets its dividend for the year, which eliminates volatility in its dividend, which also gives it a high ranking, in my opinion. The second theme that most Seeking Alpha authors and commenters push on the daily about Cornerstone is we can't withstand higher interest rates right now. Well, Cornerstone uses no leverage, and so it doesn't have borrowing cost issues. Also, the stock can operate around 5% rates and still experience bull markets, okay? The stock market, look it up, okay? It can operate, again, around 5% interest rates. That's historically low, in my opinion, and you've still seen bull markets work at 5% interest rates, okay? So look that up if you don't believe me. Okay, another toxic prevailing theme on Seeking Alpha is that Cornerstone will evaporate without an RO. Well, they returned money to us during the last RO from oversubscribers, proving they don't need our money to function, okay? So now segueing to TV, that's the initials I'm going to use, the infamous author and bear who had me fired from Seeking Alpha. That's not his exact name because I don't want more issues out of him, so it's up to you guys to put the pieces together. He did a hit piece on Seeking Alpha recently on Cornerstone, if you're interested though. Well, someone, I think it was him, fired me from Seeking Alpha, or at least this guy was trolling hard in the comments, and I told him his name, ironically, was true to his performance record, okay? And if you see his name and you match up initials, you'll kind of see what I'm saying. And then I was subsequently mysteriously let go by Seeking Alpha management, but I only have him or whoever did that to thank now. Okay, so I had a double in frac sand stocks at the time. I was big into frac sand and oil and gas in 2018, 2019, which, let me just go to a chart of AMSA so you can see here if this can pull up. AMSA is a pipeline company, and also frac sand is one of my holdings. I have silica in my portfolio, which you've always seen below. I'm actually up 2% in silica, but I had a double in frac sand stocks, okay? And I was ranked #1 in oil and gas among Seeking Alpha authors at one point, okay? Let me go to silica for you, okay? Because again, I was up 100% in my frac sand stocks. And, okay, I was writing prolifically on Seeking Alpha, so I was #1 there. Now, if you go look at my stats, I'm like last on Seeking Alpha because they fired me and I can't write for them anymore. But here's a chart of silica. Obviously, it didn't blow up, and obviously, when you go to my portfolio, you can see we still own silica. I have like a vendetta against it, and I have sort of a love for frac sand, and I don't know why. I was so heavy into it before. I put my whole portfolio in it. I was trying to do something special in my life, and I got 100% gain in these sand stocks, okay? But then they crashed from the great Dan Loeb short when brown sand entered the picture, displacing the higher quality silica sand traditionally used in fracking, the white silica sand that you can find on golf courses and beaches. So what I did was I went into oil and gas pipelines like AMSA, which I just showed you a chart of, who had large dividends, to start making back my capital gains losses in frac sand. And I started writing about them right before I was let go on Seeking Alpha. I even started using heavy margin to eke out more dividends per month. Well, the founder of one particular pipeline company and the lead manager for AMSA reached out to me to write more articles on AMSA since people bashed that one too, okay? So I told him about my overweighting in AMSA and the use of my margin. And he said he too used leverage, as many rich do, like Elon Musk uses margin to buy Twitter, etc. I always say that all the time. But he said there's a way he does it to neutralize the volatility to ensure the divs keep rolling in without blowing up his account, okay? So this is what he told me, okay? He said PFFA, okay? And as they say here in France, voila, okay? That was the change of my life, okay? He said preferreds, he said, are much less volatile than stocks and still give some upside and attractive yield, but will stabilize the more volatile AMSA position, which was the second largest holding. If we go to PFFA here, okay, we'll see that this is the preferred ETF I was telling you about, and it has a nice dividend. And it goes generally sideways, but it's susceptible to fall during market crashes just like anything else. It has a monthly dividend. I was really attracted to that. Okay, but the light bulb went off in my head to search for more funds like PFFA. And I found Cornerstone, but stayed away because I didn't like the chart, okay, as most do at first glance. But then I blew up my account using AMSA, PFFA, and other real estate funds during the Corona crash, like Moral and Remel, as those got crushed the most and even went out of business in Remel and Moral's case. So I had to think fast and buy something that still gave the high yields, still generally moved sideways, but would still bounce the hardest after the bottom was in for Corona. So I re-examined Cornerstone, okay, after that bottom, okay? So I'm going to Cornerstone again, and I re-examined it, and I started noticing that it had a huge yield, as I always knew. It had, you know, high dividends on CEF Connect. I was searching that website, and it had superior rankings on Morningstar, as I showed you. It's a 4-star fund. So I made the decision to go all in margin, Cornerstone and UPRO after the Corona crash, okay? I got loans from the SBA. I had unemployment from trading. Yes, you can get unemployment from trading stocks. I used these loans to be able to bounce back. Okay, and the rest is history, as you can see by my performance stats over the last 3 years. Again, you saw that I'm up 50% over the last 3 years. So that'll do it for the video, guys, okay? I hope you enjoyed my backstory. And if you need any help doing what I'm doing to live financially free out of your brokerage account, email me for my e-guides at aikentodd48@gmail.com. I made the e-guides after I started YouTube because time is money and I can't possibly field all of your questions. So also, if you like the video, click like, subscribe. Okay, and I'll talk to you soon. Thanks.